profitability ratios. First of all, what we have said is that these are those particular ratios which are computed basically to evaluate how well an entity performed in a given financial year. And these particular ratios, number one, they include what we refer as the operating cash flow ratio, operating cash flow ratio, of which now to remember these particular ratios is not difficult, because as the name suggests here, this is a cash flow which is computed in respect now to operating cash flow. And therefore, to compute now this particular ratio here, what we do is that we take what we refer as a operating profit. We take what we refer as a, not operating profit, but rather what we refer as a cash flow from operation, and then we divide that with what we refer as a operating profit. Operating profit. When we talk about operating profit, this is what in other terms referred to as a profit before interest and tax. And then that particular ratio always has to be expressed as a percentage. So mean that we multiply that ratio with 100. So then from there we have the other profitability ratio known as the cash flow margin ratio. Cash flow margin ratio. And this particular ratio is computed by taking the cash flow from operation, which we abbreviated as CFO, and then we divide that with the sales times 100. Number 3, we have a cash flow to sales ratio. Still, this ratio is very simple because we are computing cash flow from operation to what? To sales. So mean that we divide that with the sales. Although in this case now here, to differentiate the two, here we deduct dividends. We deduct dividends, and then we express that as a percentage. We express that as a percentage.